I would not attempt to just start calling realtors you don't know. Essentially cold calling, right? You're never going to have success. You're never going to get a meeting. The approach I like to take is to reach out to friends and people I've helped close, right? So, hey, my name is Dan Ali. I'm with InstaMortgage, president of InstaMortgage. We're located here in Dallas. We surface 30 states. We do residential financing, so may that be a purchase, refinance, taking cash out of your home. We help people buy houses. We help people reduce the interest rate on their home, and we help them get cash out of their property if that's what they need to do.
So, no, that's great. How'd you get into the mortgage business?
Well, so I was a struggling college student, and I had some friends who were doing extremely well, knowing for 100% certainty they didn't go to college, driving very nice cars, had boats, had big houses, and I was just like, what do you guys do? Because I'm a salesman, and college is not the thing for me. So, they said, hey, we're loan officers. I was like, okay, well, tell me more about that, because that sounds like something I'd want to pursue. 2 weeks later, I'm sitting in what we call a boiler room. It's about 8 desks. Everyone gets a phone. It's a list of realtors and builders, and you just call them, hoping for relationships. There was some struggles there, because you don't really do well not knowing what you're going to say, so you kind of learn your script. Over time, I started picking up a few deals, did a lot of FHA purchase transactions. Then I started being introduced to builders, home builders that were struggling with getting people approved. So it got to the point where I had David Weekley, KB Homes, the list goes on, but all these home builders were struggling to get people financed, and these people were ready to buy. Then was able to give them the opportunity to help a few of them. And over time, they realized, hey, I could get the deal done faster than their in-house mortgage company was able to. So over the course of 2 years, I started picking up a lot of business from home builders, helping people get homes that their in-house mortgage company was not able to qualify. Did that for a solid 4 years. So to put some reference, I got in the business in 2004. Interest rates were higher, but the loan products were interesting, to say the least. Sometimes it's a stated income loan. Sometimes you had to flip the term for the loan to get approved. And that was just what the environment and underwriting was offering. So did that until about 2008. And then 2008 happened, the economy crashed, interest rates went to 7-8%, kind of like they were a year ago. And this was a different scenario because we had a lot of supply and we had very limited demand. So that's what caused the housing bubble. So again, to kind of go backwards here, I applied to SMU's executive MBA program, which I came to learn does not technically require an undergraduate. The dean can approve for someone to be in the program because they have space for entrepreneurs or people that have real world experiences, which I did. He put me in under a probationary status. So what that meant was if I ever got a C in any of the classes, I would be booted. Now that could be, it's a 5-semester program. You could be 4 semesters in and get to your 5th semester. If you get a C, you lose everything. I graduated top 10%. And the reason why is because business is what I get. It's what I love. Astronomy, it's great. It's not my cup of tea. English classes, it's not my cup of tea. But you start talking numbers and marketing and value-based brand and blockchain technology, supply chain, and how things operate in a certain period of time to get to an end project. Like those are things I jam with. So they all intrigued me, which is why I loved the MBA program because I'm a businessman. So the game plan here was graduate with your MBA at SMU. That's what they call the golden ticket in Dallas. If you're in Dallas, you got an MBA, you can more than likely get a very high paying job from anywhere because it's the local school.
So you went through the MBA program and you had this ticket, your so-called ticket. So instead of taking this ticket and turning it in somewhere else, you decided to start something.
Yeah, and the reason why is because while I was doing my master's, I did a few case studies and I wanted to understand what type of homeowner was getting the most abuse, and I mean that financially. So who was getting the worst end of the stick when it came to mortgages, right? And I learned it was veterans, because they had no idea what finances went, like what a mortgage is, what the process is like, how to even get a loan. All they would do is just show up and sign where the dotted line was and said, okay, I'm in. Like, I need to go back and protect this country. So I'll just sign whatever it is so I can continue doing what I need to do. They were being charged discount points. They were being charged origination points. The interest rate they were getting was typically 1% or 1.5% higher than market conditions, just because they didn't have the financial literacy of what was happening, because their goal was to protect our country, right? So the reason I got back in the mortgage business is if I was going to get back in, I was going to do it with a purpose, which is why I started Texas VA Mortgage. So I could help educate veterans and ensure that they got the deal they deserved first. And second, they understood what the process was like. Like the mortgage process is a long process. It's, we can streamline it and close a loan in 7 days, but there's a lot of little things that have to go in there. And there's a lot of acronyms used where even just a normal person does not understand. What's a VOE? Like what is an LOE? It's a letter of explanation. A VOE is a verification of employment. These are things that are just said to you when you're going through the mortgage process. And typically you're just like, all right, cool. Yeah, do whatever you got to do. I need to get this loan, So it's just not only getting them the deal they deserved, but also understanding they learned from the process of what it is to buy a home and what the process looks like. So that way, when they do it again, they're just a little smarter, right? They get the process and they know what's happening.
Well, and I think that translates to other things in life, right? When you go, if you're taking out any other kind of loan, be it a car or a business or credit card or whatever it is, that you just understand a little bit more like this is what these things are. And, you need to advocate for yourself and not just say yes to whatever's put in front of you.
Correct. Yeah. It does correlate to, just like you said, anytime you're getting a loan, car, house, installments, furniture, right? Everything has terms and conditions, and you need to at least understand the terms and conditions of what you're signing. So you're absolutely right. So yeah, 2012, I started Texas VA Mortgage. Did that for about 7 years, solely helping veterans in Texas, right? And then we realized an opportunity because there was a wave where interest rates came back down, but we realized, hey, why are we only in Texas? We're doing really well in helping veterans in Texas, but we could go nationwide. Like what's stopping us from helping veterans across the nation? So I partnered with a guy named Shashank, who at the time owned a company called Arcus Lending. And in 2019, we merged with his company because he was licensed in already 14 states at the time. So instantly we went from being able to help veterans in Texas to then helping veterans across 14 states. So our reach got large. At that time, interest rates got extremely low. When I say low, the best deal I got a veteran was a 1.75 on a 30-year fixed mortgage. So this was the lowest of lows I've ever seen.
That's the lowest rate I've ever heard of.
Yeah. So we were helping veterans across the nation refinance their home from a 4-5% down to a 2-3. And again, there was a few 1.75s, but let's just call it 2-3%, right? Which is the lowest interest rates we've ever seen, ever.
And probably will ever see again.
Yeah, exactly. And that was at that time we were in 14. I was like, look, let's keep pushing. Let's get to more states. We transitioned our name, so now we're InstaMortgage, and we're across 30 states.
So let's talk a little bit about when you were just focused on veterans, like what was your growth strategy, and how did you make sure that everybody knew that that's what you did, that's who you served, and how were you able to grow your business?
So the way we reached out to veterans, there was various ways. So one is just social media. We had an agency that would do digital marketing on Instagram, Google AdWords. The agency did there was advertisements on TV. There was a whole game plan as far as getting in front of the right veteran who may be qualified to purchase a home. And there's data that kind of gives you information. Also, we did a lot of direct mail. So we would directly mail a veteran who has a 6% interest rate and say, look, we can take you to 4.5. This is what the new payment looks like. If you'd like to do this, give us a call. We can talk about the details. So that was another avenue. That was probably the direct mail had the biggest reach for us, right? Because you're physically sending someone a personalized document. Veterans in general are disciplined. They like to check their mail, right? And we were giving them a real mortgage payment that they could get right now. So that was, direct mail was definitely the best way, but, just sharing experiences as far as veterans we've helped. If you look at our Google reviews, we have over 150 reviews of individuals we've helped. 80% of them are veterans. So, it's a plethora of things. When you get introduced to a mortgage company, first you're going to Google it, right? See what their people are saying. Then you're going to look it up online. Then you may jump on Instagram. Then you may call someone if you recognize a name on who, we helped close. And eventually they'll call us and say, look, yeah, I trust this person. And there's others that will just go to texasvamortgage.com, fill out an online inquiry, because we've been around for 13 years. So we're number one when you go to Google and type in Texas VA Mortgage. We're the first company that shows up, and that's organic. That's not us. It's not like a paid sponsor. We've just been there for long enough to where Google recognizes we're helping veterans in the state.
All right. So when you started to transition out of just focusing on mortgages for veterans and doing, products that are, more specialized, some of the other stuff you talked about, what was your process for growing into those different markets?
Very good question. And there is a bit I would like to add when we go to the timeline of how we've gotten to where we've gotten to that I would like to insert. So I'll kind of do that and then I'll answer your question.
Okay.
So in 2012, we started Texas VA Mortgage. By 2014, I was getting swamped. I was overwhelmed. I had more business that I could handle. At the time, my brother, Sal, was just graduating from the University of Texas, which I will support, even though I'm a Mustang. I do like UT. And, he was just getting out of college, worked for an IT consulting company, did it for about a year, 8 to 5, wearing a suit, driving to Dallas. And I was like, all right, I understand you've gotten a job coming out of college, and I respect that, but now's the time that we need to team up because I have way more business than I can handle, and your skill set when it comes to communication is just off the charts. I mean, this guy could fill the room for hours. So in 2014, he had joined the company, and we were now partners in this entity helping veterans together. Currently, he sits on the VA Rep, which is the VA Real Estate Professionals Board. Not just the board, he's the president of the board. So he's extremely involved in the VA space. Together, we have grown, to where we've gotten to now. And so yeah, that's the insert I wanted to make sure we wanted to kind of put in there. Now, to answer your question, so we were still heavily focused on VA loans until about 2021, maybe end of 21 going into 22. And the reason why is because interest rates were steadily climbing, right? We were doing VA purchase loans, but there just wasn't enough for us to make that all we were doing. At the same token, this entire time, I was capable of doing any loan type. And like, I'm 42 right now. I have friends who have now bought their third home, right? So they went from like their starter home at 350, then up to 700. Now they're like 1.5, $2 million homes. And every time I talk to them, I'm like, hey, congratulations on getting your mortgage. Why don't you call me? And they're like, well, Dan, you're the VA guy. You're the VA guy. I'm like, I need to change that mentality because there's so much business I was passing on just solely because I was recognized as Dan, the VA guy. At the same token, with interest rates going to the 5s and the 6s and the 7s, that is a purchase environment. There's no longer a need for veterans to help save money on their mortgage. Either you're purchasing a home or you're choosing to take cash out of your home because you may have picked up some debt along the way. Someone's getting married, or you want to renovate your house, whatever the case may be. But because the model had changed into a sole purchase environment, which is exactly where we are right now, we recognize that. And so then that's kind of the full transition into, being branded as InstaMortgage, being able to provide everyone an outlet for financing, being able to assist entrepreneurs. So then we just, we kind of dug our teeth into letting people know that we do all types of loans. I mean, I know VA is our specialty, and we will always be a VA loan specialist. We've probably closed over 5,000 VA loans. But at the same token, as the industry changes, you need to adapt, right? And so that's the reason why we kind of opened up the loan offerings. They were always there. We were just never promoting them just because we were so busy helping veterans purchase and refinance their homes. So that's kind of why we transitioned into all the different loan types that we're currently doing now.
Yeah. So, obviously when you did the marketing for the VA, audience, there's very, like you said, there's a target there. It's a little bit easier to hit. But when you start branching out into kind of a wider spectrum, what did you find that really worked? And what were some of the things that you were like, man, if I went back again, I would not do that?
Let's see. I would not attempt to just start calling realtors you don't know. Essentially cold calling, right? You're never going to have success. You're never going to get a meeting. The approach I like to take is to reach out to friends and people I've helped closed, right? If it comes as a warm introduction via text message, hey, this is my guy, Dan. He's been in the mortgage space for 20 years. I feel like you guys should connect. And that's, one of the initiatives we kicked off, and it's been very successful. So through that and customers we've helped closed, right? They are now introducing us to realtors who then recognize that we're able to get things done faster, better, quicker, more efficiently with communication. We start becoming their mortgage guy, right? Their mortgage outlet. And then they start promoting us. So that was very successful for us. We started hosting seminars for realtors. One was called Navigating the Real Estate Market, where I had 5 top tier realtors, like Rogers Healy, Victor Vo, just names of realtors that own massive brokerages with a large team of realtors below them, the Niche Realty Group over in Frisco. And so we would have them sitting as the panelists. I would be the one asking the questions, but the room was full of realtors, right? Realtors that were looking to get in the business, realtors that may only have a few years of experience, realtors that hear these guys' names or women's names, but they never get FaceTime, right? They never get to ask them a question. So we were opening up that platform for them to, ask how they've become so successful as they've become. But in turn, I'm the panel. I'm asking the questions. I'm the MC. I'm the interviewer and the mortgage professional in the room. So through that, they recognized we were here and that we could provide them services. So over the years, they started, calling us and saying, hey, I've known you for 15 years and I'm glad that we're now connecting, as far as business. I got this customer. Here's a loan scenario. Could you please give them a call and help them out?
Yeah. Okay. I mean, so a lot of grassroots stuff is, sort of what I like to call sort of hand to hand, right?
Yeah. That. And here this year coming up, we're going to start hosting realtor seminars on teaching realtors how to become better at their craft, right? So how to win the offer in a multiple bid situation, sell it like a builder, which is, offering a complimentary 2-1 buy down to a customer. We'll cover half, the seller covers half, but now you're offering a 4.5%, 5% start rate rather than a 7% interest rate. So some of these strategies that, that realtors can start implementing that will help their house win, right? And to get it done fastest and better. So those are some things that those are some of our initiatives in 2025, which I'm looking forward to.
Well, and obviously, I mean, you get this, but what I love about it is that you're establishing yourself as the expert. And are some of these people going to take this and go use it, somewhere else? Sure, fine. But by putting yourself out there as the expert, you're creating more of brand awareness around you. And when it comes time to need that help, they're going to call you, right? Because you've done it, you know how to do it. And I think people miss that a lot. They don't want to share their secrets, or they don't want to talk about the way they do things. They don't want to give information to people. And I feel like even that happens a lot in your space too, right? In the real estate space, there seems to be a lot of these are my toys.
Right. Yeah. They I don't know what it is. I mean, look, this information's already out there. Most people are already providing it to each other, but sometimes they're like, well, this is my way of doing things, and I'm not going to tell anybody about it. I mean, look, we're all trying to help each other. That's the way I see it. I have a lot of friends that will come to me with a loan scenario, and they're like, look, my private banker's giving me this deal. I want you to take a look at it just to make sure I'm getting the best deal. And look, sometimes I got to be honest. I'm like, look, that's a really good deal. I'm not going to beat that. You need to go with that deal. And that they respect you more, because the next time they're considering a mortgage, they're going to come to you because I was honest, right? I didn't say, hey, let me see what I can do. Let me figure it out. We've been friends for a while. I think you should still use me. That's never the right approach. And that's not a good friend.
Well, and what they're going to do too, though, is that when someone else is going to buy a house, call Dan, right? Dan took care of me. He's my guy. And that's what everybody really wants. I know a guy. I got a guy.
Yeah.
Yeah.
Yeah, you're still right.
So I know you said you were looking forward to doing more seminars in 2025 and kind of maybe doubling down on that a little bit, doing some educational stuff. What do you think is maybe from a marketing standpoint in your space? And it might be something you've already talked about, but because if I say what's the hot trend everybody's on, everyone always says AI. So I'm going to pose the question in a different way, which is, what is it that people are leaving on the table? What's the biggest opportunity in your space that people are ignoring and they're sleeping on?
I think what typically happens as a loan officer is when you are in a mortgage transaction, you have two realtors on the deal, right? You got the buyer's realtor, who you're in close communication with if you're helping the buyer. And then you got the listing realtor. Most of the time, the only time you talk to the listing realtor is them vetting you to understand the buyer can buy the house, and them calling you at the end to say, are we closing and are the documents there? After that, the communication typically is done, right? I'm not their mortgage person. They just want to make sure the person sells the house, gets it done on time, and they move on, right? Because they're a listing realtor protecting the person selling the home. I think that is something being slept on. If you stay in constant communication with the listing realtor, in actuality, you're picking up two realtors in the process, right? You're retaining the trust of one that you're already working with. But then the listing realtor may have a loan scenario for you. But if you don't ask and if you don't provide constant communication through the process, like even though I don't need to call the listing realtor when we're conditionally approved, I call the listing realtor. I'm like, hey, just want to let you know, we're conditionally approved. Conditions look pretty simple. Appraisal should be in 3 days. Everything's on schedule for us to close, right? Staying in front of that listing realtor can earn you additional business even after the transaction's closed. 30 days later, give them a call. Hey, I enjoyed working with you on the transaction. Would love to see if I could help out any of your potential buyers. We have some unique products that other people don't. You saw how we operated the last transaction. We got 30 days, we closed it in 12, right? So we moved pretty quickly. And I feel like, that kind of gets left under the table. So if I were to drop a golden nugget, it's stay in touch with both realtors. Like the buyer's realtor, you more than likely already have, right? Because they potentially more than likely brought you the buyer. But the listing realtor is also a realtor. Just don't forget that they're there and make sure you stay in touch with them.
I love it. It's sometimes it's just the little things, right?